Hey everybody, this is Tim Dial, and just wanted to put this short video together here at the end of the day on Thursday, June the 5th, to give a quick update on what's going on in the market, what we can kind of expect. Tomorrow's a really big news day because the BLS jobs report comes out. We did have the ADP jobs report come out yesterday, and that caused the market to really respond positively, but we did have a little bit of negative momentum today ahead of the BLS jobs report. And I think that was just because of some other things going on in the market where people were moving money out of bonds and into stocks. And so that's a little bit of what was going on today, but it was not a big enough movement to make that much of a difference. We're really expecting a much bigger movement come tomorrow, depending on what the news is regarding that BLS jobs report. So I wanted to get into this a little bit, kind of go over some things here. This will only take a couple of minutes. I'm going to go ahead and share my screen here. So if you look here, this kind of shows us what's been going on in the market. We've been on an overall nice upward trajectory here on the 30-year bond. We were above the 200-day moving average today at one point, and then it dropped back below. We'd really love to get back above this. There's a lot of room after that to go positive. The main place this matters, it's not going to matter quite as much on purchase transactions, because when you're buying a house, the rate is what it is when you find the house you want to buy, you know. But when you're refinancing, I always tell people you can afford to be more patient, and that way we can try to lock in a rate when it's at the most opportune time. If we can break above this 200-day moving average, get up into this range, that's going to be the opportune time. We've been here before, back in this is like the best we've been in the last couple of years. We want to get back into that range again, and that way we're at an opportune time for people to lock in an interest rate who are refinancing. And if we get a positive number in the BLS jobs report tomorrow, then that can certainly happen. The one issue that we've had recently with BLS is that their numbers have been way off. They'll come in, showing much bigger job creations and things like that, and then over the next couple of months, they'll keep getting revised down because they were wrong in the first place. So they've been giving us a lot of really poor data, and that has really hurt the bond market, because the bond market doesn't move a lot on revisions. It moves on the initial job report. And so that's a big issue. So we're hoping that we get a better number from them tomorrow compared to the reporting that they've been doing in the past, where they've been so far off and then revised down later. If we get a number, because the way it works is, if jobs numbers are weak, that helps the bond market, because it looks like it's a little bit more recessionary, in all honesty. And the more recessionary things look, the lower the interest rates will go. And so higher mortgage bonds means a lower interest rate. And so a weak job market, and with the ADP number that came out yesterday, it was a very weak number. So a weak job number will help us get a lower interest rate on 30-year mortgage rates. So that's kind of what we're looking for. But as you can see here, we're on an overall positive. We did have a little bit of a negative here, but overall we've been in the green. We were up to here earlier today, and we really want to get up into this range, which could happen next week if we get a good BLS jobs report number. So keep your fingers crossed. I'll certainly keep you posted whenever news does happen. I may post something on here again tomorrow to update people on what did happen. If not tomorrow, then maybe over the weekend or Monday at the latest. So anyway, that's pretty much it. Hope everybody has a great day tomorrow, and if I don't talk to you before then, have a great weekend.